Before you pay another Medicare premium, prescription copay, electric bill, income-related Medicare surcharge, or property tax bill, stop for a moment and check whether you are paying more than the rules require. Not every senior can eliminate every one of these bills. That is the truth. But millions of older Americans qualify for programs that can reduce one or more of them, and many never apply because the help is not automatic. The biggest mistake is assuming that Social Security, Medicare, your utility company, or your county will contact you when you become eligible. In many cases, they will not. You have to ask the right office, use the right form, and meet the rules where you live. Today, I am going through 5 bills worth checking in 2026. I will tell you what the program actually does, who may qualify, which numbers matter, and the exact question to ask when you call. Stay with me through number 5 because property tax relief is completely different from one state to another, and one current state deadline proves why waiting for a letter can be an expensive mistake. And one important warning before we begin, do not simply stop paying a bill because of a video. First, confirm that you have been approved. The goal is not to create late fees or lose coverage. The goal is to stop overpaying legally and safely. If this kind of clear, verified information helps you, subscribe and turn on notifications. Medicare costs, income limits, and state programs change, and the details matter. The first bill is the Medicare Part B premium. The standard Part B premium in 2026 is $202.90 per month. For many people, it is deducted from Social Security before the deposit reaches the bank. Over 12 months, that is $2,434.80. A lot of retirees treat that deduction as untouchable. But Medicare savings programs can help eligible people pay Medicare costs through their state Medicaid program. QMB is the most comprehensive. It can pay the Part B premium, and for Medicare covered services, it can also protect you from Medicare deductibles, coinsurance, and copayments. For 2026, the federal monthly income limit shown by Medicare for QMB is $1,350 for one person and $1,824 for a married couple. The federal resource limits are $9,950 for one person and $14,910 for a couple. SLMB can pay the Part B premium. Its federal 2026 monthly income limit is $1,616 for one person and $2,184 for a couple. QI can also pay the Part B premium. Its federal 2026 monthly income limit is $1,816 for one person and $2,455 for a couple. QI funding is limited. Applications are handled on a first-come, first-served basis, and people who received QI in the previous year receive priority. Here is the part that keeps many people from applying. Those federal numbers are not always the final answer. Some states use higher limits, disregard certain income, or treat resources differently. That means you should not disqualify yourself based on one number you heard online. The correct action is to contact your state Medicaid office or your local state health insurance assistance program, commonly called SHIP, and ask, can you screen me for QMB, SLMB, and QI using my state's 2026 rules? Do not ask only whether you qualify for Medicaid. Ask specifically about Medicare savings programs. Also, do not wait for Medicare open enrollment to apply. Medicare savings programs are not limited to the October 15th through December 7th open enrollment window. Apply as soon as you think you may qualify, and ask the state when coverage would begin and whether any prior months can be covered under its rules. The second bill is prescription drug coverage and prescription copays. The program to know is Extra Help, also called the Low-Income Subsidy for Medicare Part D. Extra Help can reduce the premium and deductible connected to Medicare drug coverage and sharply lower what you pay at the pharmacy. In 2026, eligible beneficiaries generally have a $0 deductible. At a participating pharmacy, the maximum copay is $5.10 for a covered generic drug and $12.65 for a covered brand name drug. After total covered drug costs reach the 2026 threshold, covered prescriptions can drop to $0 for the rest of the year. The 2026 income limit listed by Medicare is $23,940 for one person and $32,460 for a married couple. The resource limits, including the standard burial allowance, are $18,090 for one person and $36,100 for a couple. Again, not all income and resources are counted the way people expect, so a screening is better than guessing. Some people receive extra help automatically. That includes people with full Medicaid, people receiving supplemental security income, and people whose state is paying their Part B premium through a Medicare savings program. This connection is extremely important. One successful application for QMB, SLMB, or QI may solve two problems at once: the Part B premium and Part D prescription costs. Imagine someone taking 3 covered brand name medications and paying $60 for each refill. That is $180 in 1 month. Under the maximum extra help copay, those same 3 covered prescriptions could cost no more than $37.95 at a participating pharmacy. The exact savings depend on the drugs, the plan, and the pharmacy, but the difference can be substantial. There is another advantage many people miss. If you have Medicaid or extra help, Medicare gives you a special enrollment period that can allow you to change Medicare drug or Medicare Advantage coverage once per calendar month, with restrictions in certain at-risk drug management situations. So the question to ask is, do I already have extra help? And if not, can I apply based on my 2026 income and resources? You can apply through Social Security. You can also get free help from SHIP. The third bill is your heating or cooling bill. The Low Income Home Energy Assistance Program, known as LIHEAP, helps eligible households with heating costs, cooling costs, energy emergencies, and, depending on the local program, other home energy needs. This is where the original version of this topic often becomes misleading. There is no single national August deadline. There is no one income limit that applies in every state. LIHEAP is funded federally but administered by states, territories, tribes, and local agencies. Application dates, benefit amounts, crisis rules, and income limits vary. What is true is that funding is limited and local application periods can open and close. Older adults are among the vulnerable households the program is designed to serve, but priority rules are not identical everywhere. That is why now is still a smart time to check. In a hot weather state, you may be able to request cooling assistance. In a cold weather state, the local agency may be preparing for the next heating season. Waiting until a shut-off notice arrives can leave you with fewer options. Call the National LIHEAP referral number at 1-866-674-6327. Ask for the local office that serves your address. Then ask 4 questions. Is the application period currently open? Does the program cover cooling, heating, emergency assistance, or all 3? What income rules apply to my household? What documents should I collect before I apply? While you are on the phone, ask about the Weatherization Assistance Program. Weatherization is different from paying one utility bill. It can reduce future energy costs by improving the home itself. Depending on the property and the local provider, services may include insulation, air sealing, safety testing, and heating or cooling system improvements. The Department of Energy says eligibility is generally based on income, and priority is given to groups that can include older adults, people with disabilities, households with children, and households with high energy burdens. Do not assume weatherization means someone will replace every window or install a brand new air conditioner. But for an eligible household, the long-term savings can be more valuable than a one-time bill credit. The fourth bill is an elevated Medicare premium caused by IRMA. IRMA stands for Income-Related Monthly Adjustment Amount. It is an additional amount charged to higher income beneficiaries for Medicare Part B and Part D. For 2026, the standard Part B premium is $202.90. IRMA begins when the modified adjusted gross income used by Medicare is above $109,000 for an individual tax return, or above $218,000 for a joint return. At the highest 2026 tier, The total Part B premium can reach $689.90 per month. For most people, the 2026 determination uses tax information from 2024. That creates a problem when your financial life has changed. Maybe you stopped working, maybe your work hours dropped, maybe your spouse died, maybe you lost pension income. Medicare may still be looking at an older, higher income year. Social Security allows a new determination after certain life-changing events. Form SSA 44 is the form commonly used to request it. The qualifying events include marriage, divorce or annulment, death of a spouse, stopping work, reducing work, certain involuntary losses of income-producing property, loss or reduction of pension income, and certain employer settlement payments caused by closure, bankruptcy, or reorganization. Now listen carefully, because this is where many videos give dangerous advice. A voluntary property sale or a Roth conversion is not automatically a qualifying life-changing event for Form SSA 44. A one-time gain may explain why your tax return was high, but that fact alone does not guarantee that Social Security will lower IRMA A. Loss of income-producing property generally must be outside your control, not simply the result of selling or transferring it. If your IRMA notice is based on an incorrect tax return, an amended return, or another issue that is not one of the listed life-changing events, you may still have review or appeal options, but you should ask Social Security which process applies instead of forcing the situation into the wrong form. The action is simple. Look at your Medicare premium notice or your Social Security deduction. If the Part B amount is above $202.90, ask why, then call Social Security and say, I am paying IRMA. My household income has changed. Please tell me whether I qualify for a new determination and whether I should submit Form SSA 44 or use another appeal process. Have evidence ready that may include a retirement letter, pay records, a death certificate, pension documents, or an estimate of current modified adjusted gross income. Ask when a new decision would take effect and whether any overpayment credit will be applied. Do not assume the answer before Social Security reviews the facts. The fifth bill is property tax. This is potentially the biggest opportunity on the list for a homeowner, and it is also the one that cannot be explained with a single national rule. Property tax relief is created by states and local governments. Programs may reduce taxable value, freeze an assessment, defer payment, or reimburse part of a tax increase. Age, disability, income, ownership, residency, and application rules vary widely. Here are 3 real examples that show why checking locally matters. In Texas, homeowners age 65 or older can qualify for an additional $60,000 school district residence homestead exemption, and local taxing units may offer additional exemptions. In Illinois, the Low-Income Senior Citizens Assessment Freeze Homestead Exemption can freeze the equalized assessed value for qualifying homeowners age 65 or older. For taxable year 2026, the state lists a household income limit of $75,000, and the application must be filed with the Chief County Assessment Office. In New Jersey, the 2026 combined PAS-1 application covers senior freeze, anchor, and stay NJ property tax relief. The current filing deadline for the 2025 application year is November 2nd, 2026. A person who waits for the county to call could miss a program worth real money. Those examples are not rules for the entire country. They prove the opposite. Your address determines the answer. Take out your most recent property tax statement. Find the name and phone number of your county assessor, appraisal district, or state property tax relief office. Ask this exact question. What property tax exemptions, freezes, deferrals, circuit breaker credits, or reimbursement programs are available for an owner my age at this address? And what is the next filing deadline? Then ask whether the application must be renewed every year. Some benefits continue automatically. Others require a new form annually. Missing a renewal can cause the benefit to disappear even after you qualified in the past. Also ask what happens when a spouse dies, when ownership changes, or when the home is placed in a trust. Now let us put the 5 checks together. First, ask your state to screen you for QMB, SLMB, and QI. A Medicare savings program may pay the Part B premium, and QMB can also protect you from Medicare cost sharing. Second, check Extra Help. In 2026, it can provide a $0 deductible and low maximum copays for covered prescriptions, and Medicare savings program approval can qualify you automatically. Third, contact your local LHITEEP office and ask what energy assistance is open now. Then ask separately about weatherization assistance for long-term savings. Fourth, check whether you are paying IRMAA. If your income fell because of a recognized life-changing event, ask Social Security about a new determination. Do not assume a property sale or Roth conversion automatically qualifies. Fifth, call the property tax office that serves your home. Ask about every exemption, freeze, deferral, credit, or reimbursement program and write down the filing deadline. These are not secret checks sent to every senior. They are not universal exemptions, and approval is not automatic. They are real programs with real rules, and the people who save money are usually the people who ask before the deadline. Make the calls, keep copies of every application, write down the name of every representative, and never stop paying until you receive official approval. If this video helped you understand the difference between a real benefit and an exaggerated promise, subscribe and share it with a parent, neighbor, or friend. One accurate phone call can be worth far more than another year of guessing.